Good morning, everyone. How are we doing today? It is Sunday, October 4th, and this is your daily financial news. Again, if you don't know, we do these daily financial news every day about 7:30. I do them live, no editing. It's just easier that way. So if you'd like to get your daily financial news, talk about real estate, investing your money in little 10 to 12-minute chunks, do yourself a favor, hit that subscribe button, little notification so you can see when I go live. Again, I try for 7:30 a.m. Pacific every day. Also, if you don't mind, do me a favor, hit that like button. As Graham Stephan says, smash that like button. I guess it helps the YouTube algorithm, which I know nothing about. So when I look at the daily financial news today, there are a couple of things that we're going to talk about. First and foremost, let's continue to wish well to our president, first lady, and all of those across the country impacted by this health crisis. It is real. It's not fake. We need to get to the other side because it is potentially causing, I don't know, some more pain in Q4, which we are going to talk about. Economic pain for sure. First and foremost, we need to be on the lookout for Europe. I think Europe, like February and March, is ahead of us. They are really on the cusp of another lockdown, Spain and the UK being the most pressing. And, with the weather turning colder and the threat of a flu virus coming along, we're going to need some stimulus, is my opinion, to get to the other side. To that end, President Trump, for the first time, at least publicly, kind of sent a message directly to Congress. It's the first one that I remember. I'm sure there were back channel communications and all of that. But what I saw yesterday in Twitter is basically Congress, get off your butt, do something for the American people. Frankly, do what politicians are supposed to do, right? Politicians are supposed to have opinions, they are supposed to work for their constituents. But at the end of the day, it's supposed to be negotiations. That's why, it's a multi-party system. We are supposed to take care of Americans first, right, left, conservative, liberal, Democrats, Republicans, independents, whatever, later. But let's hope. As we talked on Friday, I think that would have been October 2nd. There were some signs that, you know, the unfortunate nature of Trump and the First Lady catching this may spur stimulus. And based on some language that Nancy Pelosi has been putting out there, that may just be the case. Nancy sent a flare up to the airlines saying, CEOs, stop, cease and desist your furloughs. We expect to have what I'll call a bailout. It's probably too harsh of a term, but I don't know what else to call it. Some funds for that industry, which is being wrecked by this health crisis. She sent that out Friday, late Friday, so let's call it Saturday. I haven't seen anything since, but we've got to be doing something, whether it's an independent bill or not. As you will know, I'm not a huge fan of bailing out the airlines because from where I sit, I go, okay, airline industry is important. Don't get me wrong. Travel is important. Don't get me wrong. It's part of national security, national defense. Don't get me wrong. But do we really need all of these airlines? And would 20 billion or 25 billion dollars to get us to March 1st, it saves 30, 40, 50,000 jobs? So okay, there are extra things around it, hotels and entertainment and all of that, but okay, if we bail out the airlines, what about the movie theaters? Why don't we bail out the movie theaters, right? Nobody's or very few are going to the movie theaters. Why don't we bail them out? Well, if we're going to bail out the movie theaters, why don't we bail out the concert halls and Broadway and all these other things that are shut down? All right, well, what about musicians that can't, do what they do? And the list goes on and on and on, right? The well is only so deep. So I'm just curious where it stops. I think instead of doing trickle down where you help the big boys, why don't we help the foundation of our country, and that is the consumers. That is what has really bothered me about this crisis, is we continue to bail out the big and hope the big take care of the small. And that's just not happening. This crisis has disproportionately helped the lowest rung of our economic ladder, and we need to put help there. This is very frustrating. And that, if we don't help that bottom rung, trust me, it will be like termites in a foundation, and it will work its way up. And frankly, as I shared on Thursday or Friday, my biggest fear, and I think we saw it in Friday's jobs report, is we're starting to see the circle of unemployment work up to more expensive white collar jobs. So I believe this bailout, for the most part, has been helping the wrong folks. I believe we need to help the individuals that we told to stop working, that they're non-essential. How asinine is that, to tell an American citizen that they are non-essential? That's that's a slap in the face. Mom and pop businesses have been around for generations. You're non-essential, but don't worry. Home Depot's open. Amazon's cranking. We this has been done all wrong, and we are decimating our small and medium-sized businesses. And we need to stop bailing out huge corporations who can go to the bond market. They can go to the market and borrow money. Airlines don't need the government. They want the government because the money is cheap and there's no strings. Screw them. Let them go raise money. Let's go help mom and pop small businesses. Let's go help the individuals at the smallest rung. Let's get to March, April of next year so we can get by this damn thing. We're only halfway. We're at the most dangerous point. When you're going over a chasm, the midpoint is often the deepest. We are there, folks. And as I said, I'm afraid that nothing is going to happen, and it is going to be plenty of pain in Q4. So we started this talking about Europe. I think New York, just like last time, it's amazing how this is coming around. New York City could be the first, American metro, major metro, to really look at lockdowns or changing up again. Right? They're on the verge of some pretty scary numbers with positivity rates and the like. So we've got to stay vigilant. We've got to figure it out. And if we don't help the bottom rung, what are they going to do? Right? There's no easy answers here. And I think the one thing we really should do is stop helping public companies. They're public for a reason. They can go to the bond market. They can issue more shares. Let's help mom and pop pizzeria. Let's help mom and pop restaurant, Italian place. Let's go help the people on Broadway. Let's go help the concert folks who haven't played an instrument in a while. I mean, there's very, very interesting. Next up, I want to talk about something you and I should be watching, and it's something you and I may not watch a lot, and that is the U.S. savings rate. Hopefully it's obvious, but maybe it's not. We are a consumer-based economy, which means we spend money. Many of us spend money we don't have on credit. But what is the opposite of consumption? It is savings. So just so you know, savings back in April spiked to an all-time high of 33.6. That is not normal, and that screams GDP crash, which actually happened in Q2. Right now, the last numbers we have are for August. We should get September shortly. But the last time we had a savings rate for August, it was 14.1, which is about 6 points higher than normal. The average savings rate bounces between 7 and 8%. Now, obviously, in that savings rates, there's the economic ladder we talk about. The rich are saving more than the poor. But when we look at the blended average, the savings rate can be important. Q2, we all know by now, GDP was disaster. Q3, we probably should all know it will be the best ever. And get ready to hear that for weeks. GDP in Q3 is the best ever. The American economy is back. Blah, 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 blah. Well, Q4, we need to watch out. If we don't get stimulus and we continue to have people at the bottom rung struggle, if not starve, we are going to see the savings rate tick up because we are a consumer-based economy. The consumer is a fickle creature. They see what's going on, and at the first sign of the first sign of trouble, they retreat, they retrench. And I am really afraid that the savings rate in Q4 will tick up, which of course, if savings go up, what is the opposite? Consumption goes down. So that is pretty interesting. And then finally, the last thing is I read an article in the Investor Place. I get asked all the time where I get my material. I read everything I can that shows up in my feed. This is the first time I read something from a site called Investor Place. The author is Laura Hoy, Hoy, and it caught my attention because it talked about the 7 most overvalued companies. And I'm like, oh, I'll click on that article. Let's see what the 7 most overvalued companies are. I'll go through the list. Of the 7, I knew of 6. There was one company I'd never heard of before, which happens. But let's go through it. So again, her list, Laura Hoy, top to bottom, just the order that was in her article. First off was Tesla. That's going to get some hate. I already see a bunch of people leaving nasty comments calling Tesla overvalued. But basically, according to her article, Tesla did have a record release of cars in Q3. I think it was 139,000. We talked about it. I think it was on Friday. But she's basically saying at that rate, for every car produced, that means $500,000 in value for Tesla, the stock. And that just doesn't make sense, right? Again, she compares it to Toyota. Every car Toyota produced, it adds about 20,000 in value to Toyota stock. So I would say 500K is way above 20,000. But yeah, so number 1 stock overvalued, Tesla. Number 2 is a company I'd never heard of before. It is called Workhorse. Essentially, it's another electric vehicle company. In the article, it talks about a contract they're supposed to get with the post office. Her points were it's already baked in and the contract's not done. So what happens if the contract doesn't happen? No opinion. Apple was next, right? $2 trillion market cap, Apple. I didn't really, basically her argument is 5G is already priced in, things of that nature. I think Apple is perhaps one of the most diversified companies out there. And under Tim Cook, they have gone from essentially a hardware company to so much more. So I'm not sure I agree with that one. But again, I am reading Laura Hoy's list. Next up, Zoom. Zoom, man, 170 times forward-looking earnings. 170. Man, that is .com era. That is crazy. 170 times? Really? Wow. Beyond Meat was next. Basically, they've come out with lots of sizzle, and Robinhood traders are trading it up, not realizing that it is easy to repeat, and many of the big boys have it. And her point in the article is essentially people will eventually get off this trend. It's a fad, in her opinion. So that was interesting. Moderna is next. Moderna, we've talked about a few times, right, when they had that stock spike after a good test, and then the test only had like 4 people in it, and then the executive sold shares and all these other things. Crazy stuff. But again, Moderna, what happens if they don't pass phase 3? The stock goes to 0, essentially. And then lastly, I thought was interesting, American Airlines. And I was glad this one is in there. American Airlines, I don't know, I guess is the least healthy airline company in the most need of help. Their balance sheet is full of debt. And very early on, back 5 months ago, people were calling for American Airlines to be the one at risk from going bankrupt, BK, just to reorganize their debt. Their balance sheet is stuffed with debt. And if they come and get more debt from the government, that won't be good. So in the end, folks, that's what I got for you Sunday. I am going to do several more live streams today. I have no interviews lined up. I have plenty of topics I want to talk about as we get ready for another exciting week. Take care of yourself, enjoy, make some memories, stay healthy, and of course, have a wonderful day. Bye-bye.